Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week. And we're starting off from the dollar index. This is the weekly time frame here in the dollar index. So, last week we expected to see bullish delivery in the dollar index. And you can vividly see that in the previous forecast, we aimed to see how price was going to seek this buy side liquidity, because this is where price reacted from a monthly bullish sponsorship zone, and within the monthly bullish sponsorship zone we had a weekly bullish fair value gap. So price took out sell side liquidity, and then we saw this bullish rejection, and from then henceforth we started looking forward to bullish possibility to the upside to seek the buy side liquidity. And clearly now we can see that has been delivered. And then last week I told us to expect more bullish possibility after we saw the pullback to the downside. If we're going to trade bullish to look forward to the models, then I told us that if price was going to trade bearish, highest is to see price sweep this sell side liquidity, because here we have a bullish sponsorship zone. But what we can see clearly is that price gave us that bullish delivery to the upside. And we also looked at the possible zones in the lower time frame, most especially in the 4-hour time frame, where we could just see bullish possibility to the upside without price necessarily dipping more lower to take out the sell side liquidity to mitigate this block before going bullish. So now we can see clearly we have our bullish delivery, and from the monthly time frame we marked out our monthly bearish breakout block level, and here in the weekly time frame we can see a confluence that we have a rejection block. So we have the possibility to anticipate more bullish ride of price to the upside into the monthly bearish breakout block zone. And if this in confluence to the rejection block we are seeing here in the weekly time frame gets violated, it means that if price doesn't respect that to give us bearish model for the possibility of bearish movement of price to the downside, then we'll be looking forward to see how price may trade into the monthly bearish fair value gap as the probable next draw on liquidity. So for the coming week, this is a narrative we'll be looking forward to see: the possibility of a bearish pullback for a bullish continuation to the upside. If then we'll really want to see a clear bearish possibilities in the markets for possible coming weeks, then it means that price should violate this bullish zone, and then we can begin to look at the possibility that we may have bearish movement of price. But then for the coming week, then I'm still looking forward to the possibility that we may continue bullish to the upside into the monthly bearish breakout block zone. So let's look at the daily time frame here in the dollar index. So what we can see here in the daily time frame is this. Clearly, last week I told us if Monday gives us a bullish delivery and we see volume closing bullish, strongly bullish to the upside, then we should expect a pullback for bullish continuation, because in the 4-hour time frame we saw that we have relatively equal high points here, pool of buy side liquidity, and above that we have the daily bearish fair value gap. That was the first target I told us to aim for. And then if price gonna continue bullish to the upside to seek this buy side, we want to see price pulls back and retest that as an inversion fair value gap for the bullish possibility to the upside further. And what we can clearly see is a pullback to the downside, and price has traded bullish, volume closed above that. Price has seek the buy side liquidity. So we have the monthly bearish breakout block level still resting here unmitigated, which could serve as the next draw on liquidity, the next level that we may see price trade to. So for the coming week, if price, since we have an indecision candle here and we already have a sweep of this buy side liquidity, and possibly price wants to seek sell side liquidity, which will be the low of Friday's candle, then it means that we want to look forward to see how price would react from the inversion fair value gap. If price dips more lower, then it means we have that weekly level we mark from the weekly time frame. Then we want to see a buy model to continue bullish to the upside. So this is what I'll be looking forward to see in the dollar index. So it is either price pulls back more deeper to this level and then creates the buy model for us in lower time frame for us to have buy continuation, or we could then see price trade into the inversion fair value gap again, and then after taking out the low of Friday and then creates a buy model for us, then we can decide to go bullish to the upside, aiming for this buy side. In extension, we want to trade into the monthly bearish breakout block level. So this is the narrative I'm showing us from the daily time frame. Whatsoever then gives us a strong volume to the downside, then it means we can start considering the possibility that price would go bearish to the downside. So let's look at the 4-hour time frame to look at possible roadblocks or sponsorship zones from the 4-hour time frame. So here in the 4-hour time frame, what we can see is this. Last week, we saw how price created this movement. This was Friday's candle, and price gave bullish rejection, and then this was the last candle price printed on Friday. So we marked this sponsorship block. I told us if we're gonna see bullish movement of price, then price may not necessarily violate this zone, and then we can begin to see that the dollar index is going to continue bullish to seek the equal highs we had here, the pool of buy side. The first target is the daily bearish fair value gap before we look furthermore to the buy side draw on liquidity. So what we can now see here in the dollar index is the fulfillment of the forecast of last week. So now price has seeked the buy side. So we may see price seek this sell side liquidity before we have the possibility of the bullish continuation. So here we have our daily bearish fair value gap, which is to serve now as an inversion fair value gap. And then if price is going to dip more lower, then we have this weekly level we identify from the weekly time frame. So clearly what I mean is this: if price seeked Friday's low back into the inversion fair value gap and then decides to print a buy model for us, then we want to go bullish to the upside. Or we could then see price dip more lower to the downside and then create the model at the weekly zone we identify for us to have the bullish continuation to the upside. So this is what I have to show us in dollar index here in the 4-hour time frame. Let's look at the 1-hour time frame, because within this candle week we identify a sponsorship block there. So let's look at the 1-hour time frame here in the dollar index so that you can look at the last possible zone that if price should violate that, then we are not going to see bullish continuation in the dollar index, which is clearly this sponsorship zone here. So what we can see is the daily bearish fair value gap to serve as an inversion. So just the way I pointed out for us in the daily time frame and also in the 4-hour time frame, price has seeked the buy side liquidity. So we may see price seek Friday's low, and then if it happens that price gives us the buy model in the inversion fair value gap zone, then we want to continue bullish. So the last point of interest we have for the bullish model to be created for us to have bullish continuation then is this zone. So we have to look at this zone. If price decides to dip more lower and then create the buy model there, then we want to continue bullish. So the violation of this zone would mean that we'll start seeing price trading lower to the downside. So this is what I have to show us, guys, in the dollar index. Now let's move to our pairs, and we're going to start with the EURUSD pair. Here in EURUSD, we can see last week gave us the bearish narrative to the downside. Basically when we are expecting bullish movement in the dollar index, then we should know that the EURUSD would give us a bearish movement. They are negatively correlated. So what we can see is the fact that price has been respecting our perspective from the weekly time frame, mitigation of a monthly zone, taking out buy side liquidity. We're expecting to see how price is going to trade bearish to the downside to take out the sell side liquidity into this key level we have here. So what you can see is that price has been respecting our reference point that we've been marking, a return mitigation of 4, price now return mitigation of 4. Though last week, we expected to see that price may possibly seek this high before we have the bearish narrative to the downside. But in the 4-hour time frame, I showed us a reference point where if price should violate that to the downside, then we should expect that to act as an inversion fair value gap for us to have the bearish narrative of price to the downside. And that was what happened. So, I tried to show you guys 2 or 3 existing possibilities so that if any of it happens, you already know that a perspective has been given to you from the weekly market outlook. So what we can see here in EURUSD is if the dollar index gives us the bullish continuation, then we'd want to see that the EURUSD also continue bearish to the downside because we have our drawn liquidity resting here. So from the weekly time frame, you may anticipate possible pullback, and then we have the bearish continuation to the downside. But then let's look at that in reference also to the lower time frame. So let's get to the daily time frame, and then we look at also the 4-hour time frame and possibly the 1-hour time frame here in the Euro USD pair. So what we can see from the daily, we had the sponsorship zone, price return mitigation, a 4. Now price gave us that pullback. This is the weekly zone we marked, so we can see how price returned to that and then continue bearish. Last week, I told us we may see price seek this high before we have the bearish continuation. But then I told us if price return and doesn't give us a narrative to continue bullish from this bullish fair value gap, and volume trades below that and close below that, then we should expect a pullback for it to act as an inversion. Then we have bearish continuation to the downside. So to the recent sponsorship block established from the weekly time frame, which is this level, here in the daily time frame, we can see here we have a bearish fair value gap. Anyway, this candle on Friday traded to the upside, taking out Thursday's high. So it means that price mitigated a part of the bearish fair value gap before we have bearish movement to the downside. So what we may see for the coming week is this possibility. If price decides to trade more higher, it is either price trade into the bearish fair value gap, and then we have the bearish continuation, or price may trade into the mean threshold of this candle week that took out Thursday's high, and then we have the bearish continuation to the downside. But then we're going to look at that also in the 4-hour time frame for a possible bearish roadblocks that may sponsor the first movement we have here, or may sponsor this movement. So let's look at the 4-hour time frame, but this is the narrative here in the daily time frame. So in the 4-hour time frame here in the Euro USD, what we can clearly see is our weekly zone in which price returned to. Price fell bearish to the downside, so you can see also the bullish fair value gap in the 4-hour time frame. I told us if price violates this, we should expect a pullback to serve as an inversion for a bearish continuation to the downside, where price will target this sell side liquidity down to the fair value gap we have in the daily time frame. So what we can see here in the 4-hour time frame is this. So this is a level mark from the weekly, in which in the daily you can also see is in confluence to a daily bearish fair value gap zone. So why I also pointed to us from the daily time frame that we may see price mitigate the 50% of Friday's candle and then continues bearish. That is if price doesn't continue more higher into the daily bearish fair value gap, because we saw Friday took out Thursday's high before moving bearish to the downside. So this is the possible levels or zone we'll be looking forward to. This level here in the 4-hour time frame, which is this rejection block level, price swept this buy side liquidity. So if price should trade bullish to this and present to us a sell model here in the 4-hour time frame, when we look at that in lower time frame like the 15-minute time frame, then we should expect our bearish possibility to the downside, except price wants to seek Friday's high into the fair value gap. In confluence, we have the weekly level we mark from the weekly time frame, and then price presents to us the sell model, then we sell bearish to the downside. So this is what I have to show us, guys, here in Euro USD. So let's go to the next pair, which is going to be the GBPUSD pair, guys. So before we look at the next pair, I would like to let you guys know that the Smart Money Concept Trading Bible is going for a discount price, and that is going to be $5. So you can do well to check the link in the comment section or the link in the description section so that you can get access to yours and download that. So what we can see is this in the GBPUSD pair from the weekly time frame. So we can clearly see the bearish narrative of price to the downside. Last 2 weeks, I told us to expect a pullback into this weekly bearish fair value gap, and then we can begin to frame bearish possibility. And in the weekly bearish fair value gap zone, in the daily time frame, we saw a bearish fair value gap zone, which was more of a point of interest within the weekly zone. But then I actually gave a GBPUSD trade review. It's in the YouTube channel, so you can go look at that, go watch that, and actually learn 1 or 2 things from the review. So I'm not going to talk much about that here in the forecast. So let's just head straight to the forecast. So what we can see in GBPUSD is price return to the weekly bearish fair value gap, mitigation of that, and then we have the bearish fall to the downside. So for the coming week, looking at the narrative from the dollar index or in the dollar index, we'll be expecting to see then that the GBPUSD should or would give us the bearish continuation of price to the downside, except otherwise, I'll still be expecting more bearish possibility. So it means that next week, I'll be looking forward to see this possibility that we may see price pulls back bullish and then we have bearish continuation. Price may not necessarily have to trade more higher to seek this high before we have the bearish continuation, but then we'll have to look at the narrative in the lower time frame, the daily to the 4-hour and possibly down to the 1-hour time frame. So let's get to the daily time frame here in GBPUSD. So what we can see here in the daily time frame in GBPUSD is this. So you can see the weekly bearish fair value gap, and here within the weekly is the daily bearish fair value gap, in which we expected to see the possibility that price may sweep the previous weekly high points here to mitigate this zone, because within this zone in the 4-hour time frame we also found a rejection block. So price will seek the buy side and we'll begin to see the bearish movement. But then on Monday, price gave us this bearish movement and volume failed to trade higher to close above this volume. Price traded to the downside and volume closed below that. So on Tuesday, I began to frame bearish possibility to the downside. And clearly now we can see that bearish push to the downside. So on Friday, I shared a trade setup in the free Telegram community where we should anticipate a buy movement on Friday. And what price did was to take out our stop loss. And then what we can see is that Friday closed bullish, because I expected us to have a reversal on Friday, looking at the bearish delivery from Monday to Thursday, because Thursday we can actually see that Thursday gave us bearish delivery to the downside. So what we can now see here in the daily time frame is to anticipate that price may trade higher to this breakout block, and then we may see price gives us the bearish model in lower time frame to continue bearish to the downside. So this is what I'll be looking forward to see in GBPUSD. Price may not necessarily have to trade more higher to seek this high into this daily reference point before we have the bearish movements. So I'll be looking forward to this breakout block, because we can see sell movement, buy movement, took out this high, price fell, and then we can see volume trading below that. So price may trade here, and then we have the sell model to continue bearish. So let's look at the 4-hour time frame to look at possible sponsorship zone we could make reference to in the 4-hour time frame. So what we can see here in the 4-hour time frame is this. So you can see, guys, the rejection block I spoke about in the 4-hour, where we anticipated that price may possibly give us bullish continuation to seek this high mitigation here, sell model created, and then we trade bearish. So what we can see is that Monday gave us bearish movements. You can see price return back to this open close price level, bearish movement. Tuesday we anticipated to see bearish continuation to the downside, because we had a change in state of delivery when you check the 1-hour time frame. The review to the GBP trade setups I executed last week is in the YouTube channel. You can do well to check that. So what we can see here is the level we marked from the daily time frame, the breakout block level. And what you can see here in the 4-hour, this is where we have the last buy candle before the sell movements that took out this low. So what we can see is here, price pull back here into this 4-hour breakout, which is within the daily breakout, because this is a sell movement here in the 4-hour that sponsored the bullish movement that seek this high, and then price traded breaking that, and then price gave us this bearish delivery to the downside. So what we can see then is the level we mark from the daily time frame, and in confluence here in the 4-hour we have this bearish order block. So if we're going to see bearish continuation, we want to see how price then may trade to this bearish zone. So it means then we'll look forward to see the bullish possibility that price may want to continue bullish to this zone, and then we look forward to the bearish model to want to continue then bearish to the downside. So this is what we'll be looking forward to see in GBPUSD, except possibly price then comes with strong volume violating this, and then we can then maybe see price just continues bearish to the downside. But I'm looking forward to see the possibility that price may give us bullish continuation based on this bullish delivery, bullish continuation to the bearish sponsorship zone, and then we look forward to see in lower time frame how price would create bearish model for us to want to go bearish to the downside. The violation of this bearish reference point would then mean the possibility that we'll start having higher prices. So this is what I have to show us in GBPUSD. Let's look at the next pair on our list, guys. So here in yen basket, what we can see in yen basket is the bearish fulfillment to the downside. And you guys know we've been following this bearish fulfillment, I think, from this sponsorship block. We started framing to see how price was going to trade more bearish to the downside. And clearly the delivery has been fulfilled. You know, last week I pointed towards how we analyzed that price took out buy side, and then we saw this bearish candle. So I told us to expect to see the possibility of bullish reaction and then bearish continuation to the downside. And we look also to reference points in lower time frame, I think like the 4-hour time frame, where I told us where we could anticipate just the bearish continuation without price necessarily dipping higher to this level before we have the bearish continuation. So we are still bearish in yen basket, and then I would still be expecting more bearish possibility. So in the weekly time frame here, we're looking forward to the possibility that price may just trade higher and then continue bearish. If this is gonna be bullish delivery, then it means that price should violate this sponsorship block, and then we can start framing bullish possibility to the upside. But then looking at the order flow, we are still bearish except proven otherwise when price takes this out. So this is what I have to show us from the weekly time frame here in yen basket. Let's look at the daily time frame to look at possible roadblocks in the daily time frame. So here in the daily time frame, clearly you can see our order flow is bearish to the downside. Price return here and then bearish continuation. We can see price seeked buy side, fell to the downside here. So level marked from the weekly time frame. And what we can see is that price here return to tap that level, to mitigate that level. What we have just resting above that level is this daily bearish fair value gap resting here above the level we have here, which is then within the weekly zone. So what we can expect to see then is this possibility. It is either we see price react from the daily level we have here and then gives us the sell model in lower time frame to continue bearish to the downside, because here what you can see we have this buy movement before the sell continuation to the downside. So this is a reference point to keep an eye at. Except price decides to really dip higher bullish, then we may expect the sell model from this zone to the downside. But then I'll be looking at this daily zone, but then this is the weekly zone, but then I'll be looking at the daily zone to look at the possibility in the 1-hour time frame, 15-minute time frame, if price is going to give us the sell model. So if that doesn't present itself yet, then we may see price trade more higher to seek this buy side into this fair value gap, creating the sell model to then trade bearish to the downside. So this is what I have to show us here in the daily time frame in the yen basket. Let's look at the 4-hour time frame in yen baskets. So here in the 4-hour time frame, what we can say is this. You know, we saw previous week, 2 weeks ago, 3 weeks ago, this reaction, and then I told us to just expect how price was just going to trade bearish to take out this low points. So what we can see here from the 4-hour time frames, this price traded to the downside, return, reacted at this bearish block, and then price fell again lower. So here in the 4-hour time frame, what we can see is this bullish impulse, a fair value gap left here. Price created this sponsorship block, and then what we can see is that price mitigated that and gave bullish candle. So we may see that price may continue bullish to the upside. So you have to look at lower time frame. So price may continue bullish to the upside, seeking the buy side liquidity resting here. And then we have this rejection block, in which price then may create a sell model for us to go bearish to the downside. So we have this reference point, which is the daily level. So we have this to look at. It is either then we see this delivery, or we may see then price return to the downside, and then if price violates this fair value gap, then we may see bearish continuation to the downside. So this is what I'll be looking forward to see then in the yen basket. It is either we see this continues bullish to seek the buy side, the daily zone, and then bearish continuation. Don't forget we have the weekly reference points here. This is a weekly level. Within that we have a daily bearish fair value gap, but I'll be looking more to this level to see what really price will present here, the framework that will be created here. If that fails to be created, then we would see that price may just want to continue for the bullish to seek this buy side into the weekly zone, which is also, we have daily fair value gap within that to look at then for the sell model. Except this doesn't happen and then price decides to trade with strong volume bearish, we should expect this may serve as an inversion to continue bearish to the downside. So this is what I have to show us, guys, in the yen basket. Let's look at the next pair we have on the list. Yen USD JPY from the weekly time frame. So we can clearly see how price has been working out with the order flow to the upside, and we are looking forward to see the possibility that price may seek this buy side liquidity. So what we can see is that we have bullish narrative to the upside, but then price has been trading within this range, this high and this low. Price did not continue bullish to seek this. Price return did not seek the low. So price has been trading within the range. So what we have now is last week gave us the bullish expectation we anticipated. So we have a drawn liquidity resting here, buy side drawn liquidity. So it means that if the JPY is going to give us that bearish perspective and the dollar index is going to give us the bullish perspective, then in USDJPY we're expecting to see the possibility that price may just pull back to this level, and then we have the bullish continuation to the upside. So this is what I have to show us here in the weekly time frame in USDJPY. So this is a drawn liquidity. So whatsoever then gives us a bearish momentum to the downside, violating this zone, then we'll know that we want to start framing for the bearish movement to the downside. So this is what I have to show us here in the weekly time frame. Let's look at the daily time frame here in the USDJPY pair, guys. Here in the daily time frame in USDJPY, what we can see is this. So 2 weeks ago we had this reference point, price mitigated, bullish continuation. Last week we saw how price returned to this. This was Friday's candle, so I told us that we may see just bullish continuation without price necessarily giving us a bearish movement. So you can clearly see that we had bullish delivery to the upside. So what we can then see now is price here in the daily time frame reacted from this bearish block we have here, though from the weekly this is a drawn liquidity we have to the upside. So what we can see is that price mitigated this buy candle here we have in the daily time frame before this sell candle that took out this low and further sponsored bearish movement to the downside. So we can see price return into that, and you can see how it gave bearish energy to the downside. So since we are bullish, we would look forward to see how price then is going to trade lower. This is the weekly reference point, and what we can see here, we have sell movement before buy movement. This also seeks this sell side liquidity. So we may look forward to see if price presents to us a buy model here, then we want to continue bullish to the upside to see how price will seek the buy side liquidity resting here. So this is what we have to look forward to see in USDJPY, except proven otherwise, just the way I showed us in the weekly time frame. So except price decide not to hold from the weekly zone, and then we can then begin to look at bearish possibility to the downside, start aiming for sell side liquidity. So let's look at the 4-hour time frame here in the USDJPY pair to look at possible zones in the 4-hour time frame that would serve as the zone we may begin to look forward to see bullish possibility. So here in the 4-hour time frame, what we can see is this bearish delivery to the downside. So it means if we want to be in the bearish movement, it is either we see that price possibly return to the upside into this sponsorship candle level here, because what we can see here is that this candle took out buy side liquidity. So it is either price return here to want to continue bearish to the downside. Price may seek this sell side liquidity, and then we may see price give us a buy model, and then we can begin to look forward to see how we're going to trade bullish to the upside, targeting first this buy side liquidity. In extension, then we can aim for the weekly buy side liquidity we identify from the weekly time frame. So this is what I have to show us in the USDJPY pair, except then price violates this sponsorship block. Then we may see price trade bearish to the downside. So this is all in USDJPY. Let's look forward to the next pair, guys. Here in GBPJPY from the weekly time frame, we can see bullish delivery to the upside. We anticipated this bullish movement last week, and what we can see now is that price have traded into this rejection block level, and price gave us what the volume of price to the downside here. Though we can see it's a bullish colored candle, but what you can see is that it gave rejection bearish to the downside. but we have to stick to the order flow that we are bullish, and therefore then we should anticipate the possibility that price may just pull back, and then we have our bullish continuation to the upside. So this is what I'll be sticking to in GBPJPY, except proven otherwise, where then price doesn't hold and then we have a violation of that zone, and then we may begin to look forward to see coming weeks that GBPJPY may continue bearish to the downside. But then I'll be looking forward to see the model price will create for us in a lower time frame in confluence to the bullish direction of the price movements. So let's look at the daily time frame here in GBPJPY. So what we can see here in the daily time frame in respect to the weekly level we marked here in the daily time frame, what you can see is, don't forget price reacting from a rejection block, an opposing sponsorship zone, and then giving this bearish narrative to the downside. So what we have here we have a sell candle before buy movement that further violated this bearish order block and also took out this high points. So I'll be looking forward to see how price will dip lower, and then we have our minds looking forward to possible buy model to continue bullish to the upside. It means if price should drop lower, in case you get to be in the bearish movement by a possible pullback, so you want to trade bearish here to the downside, and then if price doesn't hold and decide to want to continue to the downside, then we know we have a bullish fair value gap resting here where price may target for the coming week. But then I'll be looking forward to see this bullish possibility. So for the bearish movement, anticipate a possible pullback back to the open price of this bullish colored candle, and then we see the possibility of a bearish movement to the downside. Your target can be to this bullish block, and then we look forward to this model for the bullish continuation to the upside, except price decide to violate this level, which is also our weekly level. And then here in the daily time frame, we can see we have a sell candle before buy movement to the upside. So this is what I have to show us in GBPJPY here in the daily time frame. Let's look at the 4-hour time frame. So here in the 4-hour time frame, what we can see is the break of this high, price pullback, and then I called out this pullback where we should anticipate to buy from. And then what we can see is the buy movement. Price has taken out this high points, and this is our weekly reference points we mark from the weekly time frame. And clearly here you can see we have this pullback before buy movement that took out this high, further went on to take out this high. So it means I'll be looking forward to see that price may give us a movement to sweep this high into this fair value gap, and then we have the possibility of seeing price trade bearish. We're looking forward to buy model for us to want to continue bullish to the upside. If price trades bearish to the downside and this doesn't hold to give us that bullish model, then we may see price further drop to the downside, and then we may be targeting to see how price will drop to this rally base rally. So we have this base level here. So this is what I have to show us in GBPJPY, guys. Let's head to the next pair for the coming week. Here in US oil, what we can see is the bearish order flow, and we've been sticking to the bearish perspective. So last week I told us to anticipate more bearish possibility to the downside. We have sell side liquidity resting here. In extension, this sell side liquidity resting here. Price return mitigated the sponsorship block, went bearish, return to mitigate the unmitigated week, and now we're seeing the bearish movement to the downside. So last week gave us the bearish close of the week, and now we have sell side resting here. So we may see price gives us a push to the upside to continue bearish to the downside. Sell side here, in extension this other sell side resting here. So this is the narrative I'm looking forward to see in USOIL from the weekly time frame. Let's go to the daily time frame to look at the framework and possible roadblocks in the daily time frame. So you can clearly see bearish order flow, break of this low, a pullback, mitigation at this bearish zone, price fell, failing to take out those low points. But anyway, we still have price giving us internal bearish order flow to the downside. So what we can see here in the daily time frame is this, when price created this engulfing candle, I told us that we would still want to hold bearish possibility, except this bearish engulfing candle gets violated, and then price now held from that zone, and then we can see the bearish fall. So what we can see in the daily time frame here is this: we have this bullish fair value gap. Price mitigated that, went bullish, but then fell and then closed below that. Price further traded and then took out this low point. So what we can see is the reaction of price from this open close price, a key level, and then bullish push to the upside. So we may see price trade high to take out Friday's high point. We have this bullish fair value gap that may serve as our inversion fair value gap. 1 hour 15 minutes time frame, we'll be looking forward to the bearish model to want to anticipate bearish continuation to the downside. First will be the target will be this rejection level, and then in extension then to see price seek the sell side liquidity. Further, we have the sell side liquidity resting here. So this is what I have to show us in the daily time frame here in US oil. Let's look at the 4-hour time frame in US oil to look at what we could see in the 4-hour time frame. So what we can see here in the 4-hour time frame is this. In reference to the levels we mark from the higher time frame, the weekly, the daily, this is the daily bullish fair value gap, anticipating it to serve as an inversion. What you can see in the 4-hour time frame, we have a bearish fair value gap resting here in confluence to the daily inversion. We have buy side liquidity resting here. So what we can see, price fell, and now we're seeing the possibility of a bullish movement. So if this bullish movement is going to continue bullish, we have a drawn liquidity resting here. So price may continue bullish. You have to check that in lower time frame and then seek this buy side liquidity, and then we can look forward to see price gives us our sell model when price mitigates this zone in confluence to this inversion fair value gap, because we also have a bearish fair value gap here in the 4-hour time frame. And then we'll start targeting to see price seek this low, and in extension we have this low resting here, a sell side liquidity low, and also this first sell side liquidity low. So this is what I'll be looking forward to see in US oil for the coming week, except proven otherwise. So guys, let's look forward to the next pair, guys. Yen gold from the weekly time frame. What we can just see in gold is that the weekly bullish fair value gap here is holding price, and price then has been trading above that, failing to possibly return to the downside to violate that. So it means then we'll be holding our perspective to the bullish side of things, since gold is actually bullish to the upside, except proven otherwise. So from the weekly time frame, you may not really get to want to interpret the bullish perspective, because some of you will be looking at this bearish rejection and then just believe that price should just fall to the downside. But you have to understand that volume is trading higher, and volume returned to the downside into a bullish sponsorship zone, and then price has been holding on above that, failing to trade back into it to possibly violate it. So the lower time frame would give us the framework for the possible biases. So let's go to the daily time frame. So what we can see here in the daily time frame is this. Last week I anticipated to see how price was possibly going to trade higher into this last up close candle before this bear movement in confluence to this fair value gap, and then we have a bearish movement. So price first actually traded to the downside to this key level here and went bullish back here, and now the bearish movement. So what we can see is this. Don't forget, this reaction is coming from the weekly bullish fair value gap, and gold is bullish. So it means if we are holding to the bullish side of things, looking at the fact that we have the sweep of this sell side and price went bullish to the upside, though price came to this fair value gap zone and then started giving us this bearish movement. But anyway, volume is trading above this rejection level. So it means if we have the movement on Monday giving us bullish close, then we want to anticipate to see that price would want to continue then bullish to the upside, except price possibly gives us bearish movement to the downside on Monday with a strong volume closing below, then we may anticipate possible further dip to the downside. So we just have to be open-minded. Since it is bullish, keep an eye then on the bullish side, except the bullish side doesn't seem to hold, then you go with the bearish perspective. So let's check the 4-hour time frame here in gold to look at possible blocks we could make reference to in the 4-hour time frame. So here in the 4-hour time frame, what we can see is this level marked during the forecast to expect bearish fall to the downside. When we had movement, I think this was Friday's candle, the last candle on Friday. So I expected that possibly price may want to trade here to now go bearish. But what we can see, price just keep going bearish. So what happened was Monday delivered this, volume closed below this, a pullback back to the block here, and then price trade to the bullish zone, and then gave the bullish delivery to the upside. To the bearish level I was looking forward to see, and then price went bearish. But then don't forget, gold is bullish, and then this bullish zone is being respected. So what we have to see then for the coming week is to see that price possibly then continues bullish, violating this level, because we can see that price respected this level and volume has been trading below that, failing to close above it. So for the bullish is to see the bullish continuation. Volume should violate that, and then we can then continue further bullish to the upside. So we may possibly see price seek this low, and then we have that bullish narrative to the upside. So this is for the bullish perspective in gold. If you're looking forward then to the possibility of a bearish movement, then this should happen to give you another possibility that you may see bearish movement to the downside. But then I'll keep an eye on the bullish side of things, except the bullish side of things doesn't unveil itself, then I would consider the bearish side. So this is it from the 4-hour time frame. Let's look at the 1-hour time frame here in gold. So what we can see in the 1-hour time frame in gold is this. So the level we mark from the 4-hour time frame. So this is the bullish reference point I'll be looking forward to see how price would react from that. If price gives us a reason to trade higher, then it means we should start looking forward to the bullish side of things. And even if price doesn't hold here, it means my last reference point for bullish possibility is back again to this. So whatsoever then violates this means that we'll start looking forward to bearish movements to the downside. So this is what I have to show us guys in gold. So I'll keep my mind and eye open to the narrative I've established, to the possible buyers I'm looking forward to see. So I'll look forward to this first zone here. If that presents the buy model, then I would really want to keep buying gold here from this zone, since the bearish movement occurred from this and then fell. But then looking at the higher perspective, gold is bullish. So it means for the bullish narrative, since it has returned to a bullish zone and respected that to give us this bullish movement, price fell to this fair value gap, and given this bullish movements, then we have this rejection level also identified from the 4-hour, giving us this reaction bearish to the downside. So I'll be looking to this zone for a bullish model to have bullish continuation. So whatsoever violates this block and also disrespect this level would be what would then give us the anticipation to start looking forward to bearishness in gold pair. So this is what I have to show us for the coming week, guys. Cheers and God bless you all.